Welcome to another exciting video at Trader Wall. In today's deep dive, we're going to explore the world of Bitcoin, what it is, how it works, and why it's revolutionizing the financial landscape. By the end of this video, you'll have a solid understanding of Bitcoin's fundamentals, its technology, and why it's become the most talked about digital asset of our time. Let's get it started. Introduction to Bitcoin. Bitcoin is the world's first decentralized digital currency, created to provide an alternative to traditional financial systems controlled by banks and governments. Unlike fiat currencies like the US dollar or euro, Bitcoin operates on a peer-to-peer network, allowing users to send and receive funds directly without intermediaries. At its core, Bitcoin runs on blockchain technology, a distributed ledger that records every transaction across thousands of nodes worldwide. This ensures transparency, immutability, and security. Bitcoin's limited supply of 21 million coins, hard-coded into its protocol, makes it deflationary and positions it as digital gold for many investors. The history of Bitcoin. The Bitcoin story began in 2008 when an individual or group using the pseudonym Satoshi Nakamoto published a white paper titled Bitcoin, a peer-to-peer electronic cash system. The goal was to create a decentralized currency that eliminated the need for trust in third parties. In January 2009, Nakamoto mined the first Bitcoin block, known as the Genesis block, embedding a message referencing the financial crisis. The Times 03 Jan 2009 Chancellor on brink of second bailout for banks. This marked the start of a movement to challenge traditional banking. One of the earliest Bitcoin transactions occurred in 2010 when programmer Laszlo Hanyecz paid 10,000 BTC for 2 pizzas, now worth hundreds of millions of dollars. Bitcoin's history is also marked by controversies, exchange collapses, and halving events where the reward for mining Bitcoin is reduced, adding scarcity to the system. How Bitcoin works. Bitcoin operates on a blockchain, a decentralized ledger that tracks all transactions. Each block contains a set of transactions, a timestamp, and a cryptographic hash of the previous block, linking them in a secure chain. Mining is the process of validating transactions and securing the network. Miners compete to solve complex mathematical problems, and the first to succeed adds the block to the chain and receives a reward in Bitcoin. This reward started at 50 BTC per block in 2009 but decreases by half approximately every 4 years. Transactions are verified using cryptographic keys. Public key. Like an account number, it allows others to send Bitcoin to you. Private key. Like a password, it is used to access and manage your Bitcoin. This system ensures only the rightful owner can control their funds. Bitcoin's growth and adoption. Bitcoin's journey from being worth less than a cent to reaching an all-time high of $69,000 in November 2021 is a testament to its growing popularity. Its adoption began with niche communities and expanded as exchanges like Coinbase and Binance made buying Bitcoin accessible. Institutional adoption surged when companies like Tesla, MicroStrategy, and Square started adding Bitcoin to their balance sheets. Governments like El Salvador made Bitcoin legal tender in 2021. Further validating its role in the global economy. Bitcoin has also found utility in regions with hyperinflation, such as Venezuela and Zimbabwe, where it serves as a more stable store of value compared to local currencies. Key Bitcoin terms. Explained. Understanding Bitcoin fully requires familiarity with several core terms that define how the network functions. Let's break down some of the most crucial terms. Blockchain. The blockchain is the foundational technology behind Bitcoin. It's a decentralized ledger, a series of blocks that store transaction data. Each block contains a list of transactions, a timestamp, and a reference, or hash, to the previous block. This structure forms a chain, hence the term blockchain. Blockchain technology ensures that once a transaction is recorded, it's immutable, meaning it cannot be altered or erased. This feature prevents fraud and double spending. Bitcoin's blockchain is fully transparent, allowing anyone to verify transactions at any time. Mining difficulty. Mining difficulty is an algorithm used to adjust how hard it is to solve the cryptographic puzzle in the Bitcoin network. Every 2016 blocks, 2 weeks, The network automatically adjusts the difficulty to ensure that a block is mined roughly every 10 minutes, regardless of how much computational power is being used. The difficulty adjusts based on the total computing power, hash rate, of the network. If more miners join and the network's total computing power increases, the difficulty will increase to maintain the 10-minute block interval. Similarly, if miners leave the network, the difficulty will decrease. Bitcoin halving. The Bitcoin halving event happens approximately every 4 years, cutting the mining reward in half. Initially, miners were rewarded 50 BTC for every block they mined. After each halving event, this reward decreases, with the most recent halving in 2020 reducing the reward to 6.25 BTC per block. Halvings are significant because they reduce the rate at which new Bitcoins are introduced into circulation, adding a deflationary aspect to the currency. As Bitcoin approaches its supply cap of 21 million coins, halvings will continue to occur until all Bitcoin has been mined, which is estimated to happen by 2140. Lightning Network. The Lightning Network is a second-layer protocol built on top of Bitcoin to enable faster and cheaper transactions. It allows users to open a payment channel off the main blockchain, conduct numerous transactions privately, and then settle the net result on the blockchain. This reduces congestion on the main Bitcoin network and provides near-instant transactions with minimal fees. While still evolving, the Lightning Network has the potential to make Bitcoin a more practical medium for everyday payments. Who uses Bitcoin? Bitcoin has a diverse user base. Retail investors. People buying Bitcoin as a long-term investment or a hedge against inflation. Institutions. Companies and hedge funds investing in Bitcoin for diversification. Traders. Speculators profiting from Bitcoin's price volatility. Everyday users. Using Bitcoin for remittances and online purchases. In countries with limited banking access, Bitcoin enables financial inclusion by allowing anyone with internet access to participate in the global economy. Biggest Bitcoin holders and influencers. Several entities hold significant amounts of Bitcoin. Bitcoin whales. Individuals or organizations holding large quantities of Bitcoin, often influencing the market. Institutional players. Companies like MicroStrategy hold over 152,000 BTC as of 2024. Mining pools. Large-scale miners who secure the network and accumulate Bitcoin. Prominent advocates like Michael Saylor, Jack Dorsey, and Cathie Wood have played a crucial role in promoting Bitcoin's adoption. Bitcoin and controversy. Bitcoin's journey hasn't been without challenges. Critics point to environmental impact. Mining consumes large amounts of energy, often sourced from fossil fuels. However, renewable energy usage in mining is increasing. Regulatory concerns. Some governments ban or restrict Bitcoin, citing money laundering and financial instability. Volatility. Bitcoin's price swings make it risky for conservative investors. Bitcoin's impact on the financial system. Bitcoin has already started challenging the traditional financial system in several ways, and it could continue to do so with increasing adoption. Disrupting traditional banking. Bitcoin is built on a decentralized, peer-to-peer network that eliminates the need for banks as intermediaries. Traditional banks rely on trust between parties and require third-party verification for financial transactions. Bitcoin, on the other hand, uses cryptography to verify transactions directly between users, making it borderless and free from censorship. This eliminates fees associated with traditional banking systems, including international transfer fees. The rise of Bitcoin could eventually lead to a shift in how we think about money. Centralized banking systems, which have historically controlled monetary policy, e.g., setting interest rates, controlling inflation, could find themselves at odds with a decentralized currency that operates without any central authority. Bitcoin as a store of value, digital gold. Bitcoin has often been referred to as digital gold due to its properties of scarcity and limited supply. With only 21 million BTC ever to be created, many view Bitcoin as a hedge against inflation and currency devaluation. Unlike fiat currencies, which can be printed at will by central banks, Bitcoin's supply is fixed and predictable. During times of economic uncertainty, Bitcoin's price tends to rise as investors move away from traditional assets like stocks or real estate. It also provides a refuge in countries suffering from hyperinflation or economic instability. For example, in Venezuela, where inflation reached over 1,000% in 2018, Bitcoin provided an alternative store of value and medium of exchange for the population. Decentralized finance, DeFi revolution. Bitcoin's success has been the catalyst for the growth of decentralized finance, DeFi platforms. These platforms, many of which use blockchain technology similar to Bitcoin's, allow users to borrow, lend, trade, and earn interest on their crypto assets, all without a central authority. DeFi represents a fundamental shift away from traditional financial institutions and towards a decentralized, permissionless financial ecosystem where anyone with internet access can participate. Bitcoin is often used as collateral in DeFi lending protocols, giving it a central role in this rapidly expanding sector. The future of Bitcoin. As Bitcoin evolves, its future could include broader adoption as a global currency, institutional support through ETFs and large-scale investments, technological advancements like Taproot, enhancing scalability and privacy. While debates about regulation and scalability persist, Bitcoin remains at the forefront of the digital financial revolution. We've covered everything from its history and core technology to its rise in popularity and the role it's playing in the future of finance. If you found this video helpful, don't forget to like, share, and subscribe for more in-depth guides and updates on all things cryptocurrency. Got questions or thoughts about Bitcoin? Drop them in the comments below and we'll be happy to discuss. Thanks for watching and happy trading.